Good day, fellow investors. BHP stock is down 30% over the last 2 years. However, the cash flows are still there, the dividend there is still strong, and the market capitalization, keep in mind that number for later, is 126 billion US dollars. Of course, if I look at this from a longer term perspective, yes, the stock is down a little bit, but you can say, okay, there was the pandemic downturn, there was the 2015 downturn with, what was it, the disasters in Brazil, but also the disastrous acquisition of oil assets, of whatever they were doing during this period here, that they were paying the price here. And if you look at the long term, there are always these crises here and there, but the long term is a time of compounding. And from a long term average, we can see that the stock is now in that cyclical downturn. Not a crisis, the world is ending tomorrow downturn, but just a normal cyclical downturn that can create an opportunity. So we are going to discuss the business, the metrics, and then also put it on our intrinsic value table, put it on our value investing quadrant, and you can see BHP here giving good returns. By the way, if you want to follow a systematic value investment comparative table like this with something that I buy every month and distribute into my portfolios, then you can check my research platform where this is actually what I do. And don't worry, this is the YouTube intrinsic value template. Just two stocks, ADM and Berkshire, are overlapping when it comes to what's covered on the stock market research platform. Check it out. So let's go into the business. They have great global, long-term, low-cost commodity producing assets, going from iron ore in Australia to copper in Latin America to the new up-and-coming Potash Jansen mine that will produce 10% of global potash supply. So great assets, delivering extremely high cash flows. Keep in mind that over the cycle, over the last 15 years, the average cash flow, operating cash flows, have been 15 billion. Compare that to the market capitalization, you can see that it is above 10%, the operating cash flow yield, but also when it comes to returns to shareholders, 83 billion has been returned over the last 10 years, 9 years, and therefore 83 billion, that's a very good 8% yield for shareholders when it comes to this economy. And we have had more downturn cycles than upturn cycles in the last 10 years. Premium assets, low-cost producers, there is also some coal, great long-term asset base for copper, and copper prices are booming, and then again 10% and more of potash global supply at the lowest quartile cost. However, let's also discuss iron ore here, because if you look at the unit costs, when it comes to mining plus shipping, we are somewhere around $40 per ton for iron ore. Also, other competitors have that lower production costs, but if we look at the outlook for iron ore, it is expected that prices will be lower as there is plenty of low-cost production, and demand from China might not grow as fast as it has been growing in the past, because China is shifting towards more of a service economy rather than a building infrastructure economy. Of course, it will still demand iron ore, but at a lower pace than it was usually, and therefore iron ore prices are still holding. However, the expectation is for them to go lower, which means also lower cash flows for BHP long term. That's also a reason why they are diversifying into potash and high growth copper. And you can see that iron ore production remains healthy across all the major miners and across very low cost prices. If we look at the outlook for prices going forward, you see here that the Bloomberg consensus is for 80-90, which means that in a slowdown it will go to 70-60, and in a boom it will go to 120, 130, 150. That is again the cycle that we always have to keep in mind when it comes to iron ore and all other commodities. When you look at stock prices, of course, this was the great downturn China slowing down scare here, and prices were 45. This was the boom post-pandemic, higher supply issues, whatever. And now that has stabilized, but still costs are a little bit lower. So I would expect the long-term average to go a little bit down. So we have higher prices, lower, lower, and now you can see the trend is pretty clear here with ups and downs. We'll later discuss this into the financial analysis. Copper, they have Chilean program growth, further expansion growth, so they are planning to really increase that production of copper, and they also have low-cost production increases, which is always a benefit. They have entered a deal for the Josemaria Landin mining projects and Filo projects, transitioning to Vicuña. So really positioned there for very, very long-term copper mining, which is a commodity that will likely be in demand for the next few hundred years. They also have a top-tier asset for the next 100 years, which is Jansen Potash mine, and maybe it will not be that profitable in the short term, as we will see in a moment, but over the long term it will likely be printing money. Let's look at the shorter term results. Revenues, EBITDA 12 billion for the half of the year, so their fiscal year ends in June. For the first half of the year, EBIT, taxes are significant, West Australia, things like that, and we have profit of 5 billion, dividend 2.5 billion for the first half of the year, but very good numbers, and you'll get a 5-6 billion dividend likely, which is then the 5%. However, we have to keep in mind here the EBITDA margin 63%, copper also very, very high, and they are investing into this future looking commodities like iron ore, copper, and of course potash, based on global growth in population and demand. Very focused on shareholder returns, balance sheet, lowering the debt, and growth for capital investments. Here is a nice chart showing what they are working on and how copper and potash, 10 billion population, more urban population, wealth increasing, electrification, all those commodities are there to help. Let's look a little bit into the finances of BHP. If we look at the numbers, we have copper, EBITDA 5 billion, iron ore doing better, EBITDA 7.2 billion, and if we then also look coal, not that significant now, but we also have Jansen to look at, and they will produce end 26, so let's start from 27, 8.5 million tons per annum. If I compare that to Nutrien, Nutrien produces 14 million tons per annum, and the gross margin is 1.5 billion for 2024, 2.3 billion for 2023. So Jansen will produce a little bit more than half of that. I can say that maybe in the first year they will make 1 billion in free cash flow, especially as their production will also lower prices, given that it is 10% of global supply. So of course, potash prices going higher would do much better. You can see here the sensitivity for Nutrien, but given Jansen's supply, I think that the real profitability will come in the 2030s, as it is a 10-year-long mine. However, going deeper into this, we have to also understand the sensitivity. And you can see that if iron ore prices go down $10, EBITDA changes 1.1 billion down. If copper goes from 5 or 4.5 to 3.5, that's 2 billion less in EBITDA. However, the production is pretty stable, low cost. So if we look at the whole picture there, we should get to 25 billion of EBITDA. Then we have the 10 billion of investments. So there should be some good free cash flow. I have estimated the value creation around 8 billion per year across those cycles, which is what we will put into our valuation template. As said, you can download this in the link in the description below on my free course. So let's go to BHP, you click here, and I have cancelled the other two scenarios because I want to show you this is as cyclical, and then we'll later discuss the cycle. But free cash flow, 8 billion, 3.07 per share. Let's assume it grows at 4% on higher production, inflation, things like that. Terminal multiple, 20 on the dividend or free cash flow, which is likely also a little bit lower now, but that's on an 80% dividend payout ratio from the free cash flow. The intrinsic value is 52. 52 intrinsic value, we are there with the stock price for a long-term 10% return. However, I have to also mention the cyclicality. Here and there, once in a decade, there will be ugly, and then the stock price, iron ore prices, copper prices, global recession, whatever, something happens here and there when the market gives you a stellar opportunity. I cannot predict whether the stellar opportunity will come in the next 5 years. Nobody can. But you can then have a position. Keep in mind it's always a cyclical, thus don't put all your money into this, but have a position in a diversified portfolio, and then when and if something goes down, then you compare it on the list, of course, to other opportunities and see whether you should double down on this or on something else. In the meantime, you get that 5-6% dividend, you compound, you have protection against inflation that is likely going to be a major play long term. You have that long-term trends, population, commodities, everything there with BHP, which is now a high quality asset and therefore something to consider when it comes to adding to portfolios. Keep in mind the cycle depending on how opportunistic you are, but when it comes to the value investing quadrant, I have put it here a little bit more riskier because it is a cyclical, but still there into the bunch of the 10% long-term return situation. Not bad. Of course, once in a decade you might find it here for a 15-20% return, but that's only once in a decade. And if you have it in your portfolio, you might actually get this opportunity if you follow it and you know what's going on. Thanks for watching. I'll see you in the next video.